Well, the current U.S. earnings season is now entering the home stretch, and consumer goods are in focus, with the likes of big retailers like Lowe's, Target, and Macy's all due to report. Our next guest is also watching for signs of companies monetizing artificial intelligence and believes stock could be reaching a near-term plateau. Lots to talk about, so let's jump into it with a favorite guest of ours, JJ Kinahan, Chief Executive Officer of IG North America. JJ, thanks a lot for joining us. First of all, what do you think we're going to hear from these big retailers? What kind of snapshot of the U.S. consumer are they going to provide?
Yeah, what I'm really interested in hearing, Paul, is are consumers trading down, if you were? In other words, will this be a good earnings season for stocks like Dollar General as compared to maybe stocks like Macy's, where people aren't buying as high end of goods? They're trying to look to save money where they can. And so those stores that list prices are just a bit lower or, considered maybe a step down in quality, this could be a fantastic time for some of them. Whereas those who are, I will call, listen, your high-end luxury goods do well no matter what. It's that mid-end or that mid-price that could have a little bit of issues right now. And I think that's the most interesting part of what we're going to see. Is this going to be a great time, as I say, for the Dollar Generals of the world, the TJ Maxx, and a tougher time for the Macy's and maybe even Targets of the world?
Walmart provided some commentary and guidance that excited the market last week or the week before, I believe. Did that point to what we may? Did that provide evidence of what we may see this week?
I think absolutely, Paul. Again, Walmart, obviously the biggest, and in terms of prices, et cetera, talking about the fact that they were seeing great demand from clients. Some of the areas they saw demand included food, which we know has been worldwide a place where we've seen prices increase significantly. And so with that, I think this goes exactly to what I'm saying. And I'm also interested to hear in the back to school market what these companies have to say about how demand has been as people are spending money and getting the kids clothed, et cetera, as we head back.
Okay, so let's take stock of earnings season all in by the time it's all over. What have we seen? How strong a season has it been in your mind?
It's been a very strong season. And, we see almost 10% growth, but 91% of the companies reporting. That's really impressive overall, Paul. And so, again, this is really a time that people should be celebrating in many ways because we have seen such strong growth. And it really maybe shows a little bit of a disconnect, which happens occasionally between Wall Street and Main Street, because at the same time, what's the biggest thing we're hearing as we're having a Democratic national campaign literally 4 blocks from our office here in Chicago. And so what's one of the things we're hearing is about high prices. So we seem to have, as I said, a little bit of maybe a disconnect right now, one way or the other. And that's why I think in the shorter term, we saw a glimpse of how quickly we can go down 2 weeks ago today. And so we'll have to see, or a week ago today, we'll have to see what continues there, and will there continue to be pressures on these companies to meet their forward earnings targets?
We did see some evidence in the quarter when the big tech giants, the big AI players reported results that expectations are very, very high, and the potential for disappointment is there if companies don't meet sky-high expectations.
Yeah, absolutely. And I think, AI, I'm glad you brought it up, Paul, because one of the things that it seems to me is that this has really been an area where we've now seen billions of dollars spent. And I think that they're finally getting challenged on, okay, you spent all this money. What's the return on that investment? Yes, we've seen some cool language models, perhaps, and things like that help write papers. But at the end of the day, whatever we really seen that is making a difference. And I think that that's the question that's going to be asked in a much harder way over the next year of the CEOs on the earnings call, where they're going to have to come out and produce and say, this is why we spent that money. Here are the results that we are seeing going forward. And as you're seeing also, maybe they are seeing results and we don't see it because some of the technology companies have begun layoffs, unfortunately, for people's jobs. Is that maybe because they've seen some success? Right now, there's no evidence that that's the case. It's more of an evidence that we're seeing a slowdown for some of the demand.
One of the stocks you like, and it is involved in AI, it does put AI to use, Amazon.
Well, again, it's hard not to. This stock continues to go higher. We continue to see our clients it being one of their favorites, and I think the reason being they're just, as they call themselves, the everything store. It's really hard to say what businesses they're not involved with, and that they do really well and continue to keep prices incredibly low, as we just got done talking about, for their clients.
And there's lots of news on the rail sector in this country. We could be headed for a double work stoppage of both of the big rail companies. One of the stocks you also like, CVX, a big rail operator in the U.S.
Yes, absolutely. And this is one that we're seeing more supplies being shipped, et cetera, which is helping things. And also CVX Chevron involved in a lot of energy, et cetera. So with that, it's interesting to me that in this time where there's maybe a little bit of a doubt about if there will be the energy demand going forward, this is one that is could be a great beneficiary if we continue with this great demand. And
we get a lot of questions here these days about GE, which is a different company now after the splitting of the old GE into 3 different companies. This one, ticker symbol GE, does business as GE Aerospace. It's a pure play now in the aerospace business. You like this one as well?
Well, you're hitting on it exactly, Paul, and that is, it is not the Jack Welch company of the 1990s and 2000s. This is a completely different company, really lean. In general, I think is the greatest thing you can say for GE. They cut all the fat out of the budget, operating very lean, operating with great demand, producing things really quickly, and being innovative. If you and I talking 15 years ago, I don't think innovative and GE would have been in the same sentence, but it really is amazing how they've turned this company around, and you're seeing the results in the stock. And, again, this is one our clients absolutely love as we continue to see it. It's been an absolute amazing story over the last year.